The global stock market has been on fire in recent years. Artificial intelligence, cloud computing, and automation. They've created what many people call the new industrial revolution. But behind this surge, there's a single point of failure. A tiny island, one company, and one geopolitical risk that could shake the entire world economy. Let's break this down. Over the last few years, a handful of giant tech companies have powered most of the market's growth. They're the ones building AI tools, cloud services, and advanced chips. Investors have poured billions of dollars into them, driving their valuations to record highs. But there's a major problem that almost nobody talks about. It's not inflation. It's not interest rates. It's dependence. Dependence on a single link in the global supply chain. And that link is TSMC, the Taiwan semiconductor manufacturing company. Let's take NVIDIA as the perfect example. Everyone knows NVIDIA. They make the world's most powerful AI chips, the H100, the B200, and so on. These chips are the heart of every AI data center on the planet. But here's the catch. NVIDIA doesn't actually make them. They design them. The real manufacturing, the part where silicon turns into reality, happens at TSMC. And TSMC doesn't just build NVIDIA's chips. It also produces Apple's processors, AMD's CPUs, and most of the world's cutting-edge semiconductors. In fact, one company in Taiwan is responsible for about 80 to 90% of the most advanced chips on Earth. Now imagine this. All those AI servers, cloud computers, self-driving cars, and smartphones all rely on one company located on an island, less than 200 kilometers off the coast of China. That's not diversification. That's concentration risk at a global scale. And if anything disrupts that production line, it's not just NVIDIA or Apple that would suffer. It's the entire modern economy. You might say, well, can't someone else just manufacture those chips? That sounds reasonable, but the reality is far more complex. To produce next-generation semiconductors at 3 nanometer or even 2 nanometer scale, you need machines so advanced that only one company on the planet can build them. That company is ASML, based in the Netherlands. Each lithography machine costs around $400 million, and only a few hundred of them exist worldwide. Even if another country had those machines, it still wouldn't be enough. You'd also need the experience, the software, the chemical supply chains, and the skilled workforce. And TSMC has all of it built over decades. There's another manufacturer, Samsung, but Samsung still struggles to match TSMC's production yields and consistency. In chip making, even a 10% defect rate is catastrophic. When each wafer costs millions of dollars, a few percentage points can destroy profitability. NVIDIA actually learned this lesson during the pandemic, when it briefly used Samsung's foundries, and quickly switched back to TSMC because the yields were too low. In other words, there is no real plan B. This is why global governments, especially the United States, are desperately trying to build local chip factories. TSMC itself is building new fabs in Arizona, but these aren't plug-and-play facilities. They're among the most complex structures ever built by humans. Inside, the air is cleaner than a hospital. Workers wear full-body suits to avoid a single dust particle. Each building costs tens of billions of dollars, and every system must work with micron-level precision. And even if you build the factory, you still need the engineers who know how to run it. And that's another challenge. When TSMC started operations in Arizona, they had to fly engineers from Taiwan just to train local workers. The learning curve for 3 nanometer technology is not something you can close in a few months. It can take years or even a decade. And here's another problem. Even if those U.S. fabs become operational, they won't be producing the most advanced chips right away. They'll start with slightly older nodes, while the leading-edge 2 nanometer technology remains in Taiwan. So yes, the U.S. is building capacity, but scaling it to TSMC's level is a long uphill journey. Now let's talk about the geopolitical risk, the elephant in the room. Taiwan is self-governed, but China claims it as its own territory. U.S. Intelligence believes Beijing could be preparing for possible military action within the next few years, possibly by 2027. Whether that happens or not is anyone's guess. But even the threat of conflict is enough to shake global markets. If China ever moved to take control of Taiwan, TSMC would be caught in the middle. And here's the frightening part. Even if China didn't destroy the factories, they might still stop working. Why? Because TSMC relies on U.S. software, European machinery, and global logistics networks. A war would cut off those lifelines immediately. The fabs would go dark. The U.S. government knows this. There are reports that Washington has contingency plans to disable TSMC's equipment before allowing it to fall into Chinese control. There's even talk of evacuating key Taiwanese engineers. If a conflict begins, it sounds extreme, but that's how vital this company is. Because if TSMC stops, the global tech economy stops. The AI revolution halts. Smartphones, electric vehicles, data centers, everything freezes. Let's zoom out for a second. China already controls more than 90% of the world's rare earth refining. That's the material used in electric cars, batteries, and defense systems. If they also controlled advanced chip manufacturing, they would hold a technological chokehold on the entire West. This is not science fiction. It's basic geopolitics. Control the inputs, and you control the future. So what would actually happen if TSMC went offline? AI companies like NVIDIA and Meta would be paralyzed. Apple's iPhone production would stall. Amazon's cloud servers would freeze. Microsoft's AI models would lose their processing power. Tesla's autonomous driving systems would halt. In short, a single point of failure could trigger a global tech recession. That's why investors, economists, and governments are all paying closer attention to the Taiwan issue than ever before. Now, I'm not saying the world is about to collapse tomorrow, but it's a reminder that the digital economy we depend on is built on fragile foundations. For decades, globalization made everything cheaper and faster, but it also made supply chains extremely vulnerable. We traded resilience for efficiency, and now the bill may be coming due. So what's the solution? Decentralization, diversification, and a massive investment in domestic semiconductor production, not just in the U.S., but also in Europe, Japan, and South Korea. We can't eliminate risk entirely, but we can spread it, and we can prepare for shocks before they arrive. In the end, this isn't a story about fear. It's about awareness. AI, automation, and computing power are shaping the future. But the stronger the system becomes, the more fragile it can get when built on one point of failure. A global economy resting on a single island. That's not stability. That's vulnerability disguised as progress. So the next time you hear about record AI profits, remember this. Every chip has a birthplace. And right now, most of those chips are born in Taiwan. If that changes, so could the entire global economy. This is Money Studio, helping you see the bigger picture before it becomes tomorrow's headline.